All right, let's talk about something that makes pretty much everyone's heart skip a beat, getting an unexpected letter from the tax department. Today, we're going to demystify one of the most common ones, the TDS notice. We're going to break down why they happen and, more importantly, how you can go from that feeling of dread to feeling totally in control. Okay, let's jump right in.
And this right here, this gets to the absolute heart of the matter. So let's get one thing straight from the get-go. That notice you received probably isn't accusing you of being a tax cheat. Nope. It's flagging a mismatch. It's the system's automated voice saying, hey, something here doesn't line up. It's a data problem, not a character problem.
We all know this feeling, don't we? That little knot in your stomach. But what if I told you the real cause is often less about you fumbling a calculation and more about a crack in a process somewhere? Well, that's exactly what we're going to get to the bottom of today.
So here's the first big mindset shift we need to make. TDS errors are, at their core, system failures. They're not just simple math mistakes. And that's a huge deal. It means the fix isn't about being better at arithmetic. It's about building a stronger, smarter process.
The best way to think about this is to picture your TDS compliance as a chain, a series of strong, interconnected links. But here's the catch. It only takes one of those links to break for the whole thing to fall apart and trigger that dreaded notice.
And here they are, the 6 critical links in that chain. It all starts with picking the right section for an expense. Then you've got to apply the correct rate, deduct on time, deposit on time, file everything accurately, and, this is a big one, make sure your vendor's PAN details are 100% correct. You have to be precise at every single one of these steps.
Okay, so if that's our chain, where does it usually snap? Well, we're about to play detective and unmask the 4 most common culprits, the root causes that are behind the vast majority of these tedious headaches.
First up, we've got misclassification. This one is huge. So, for example, say you hire a technical consultant. Is that a contract for work, which is Section 194C, or is it a professional service, which falls under 194J? They look similar, but they have totally different tax rates, and you can bet the tax department systems are looking for these kinds of mistakes.
And make no mistake, this isn't just a slap on the wrist. Getting this wrong leads to some pretty painful consequences. You'll get a notice for a short deduction for sure. You'll owe interest on that amount. And the real kicker? The entire expense could get disallowed. We'll talk more about how painful that is in just a minute.
Culprit number 2 is all about the clock. And what's interesting here is that there are actually 2 separate ways to get the timing wrong. First, you might just forget to deduct the tax at the right moment, when you credit the vendor's account or when you actually pay them. Or you might do that part right, but then you're late depositing that money with the government. The system tracks both deadlines, and it doesn't miss a thing. Now for our third root cause, and oh boy, this one is the engine that powers countless automated notices. Simple, old-fashioned data errors. Look, in today's world of automated compliance, your data accuracy is your compliance accuracy. Getting the details right is your absolute first line of defense.
And you'd be surprised what can trip the system up. An invalid PAN, a vendor's name that doesn't perfectly match what's in the official database, or even just a simple mistake when you're tagging a payment challan. Every single one of these tiny errors creates a mismatch that the system is built to flag, and that's when you get that automated notice from CPC TDS.
And our fourth culprit? This one is practically tailor-made for automated systems. It's the mismatch between what your own books say and what your tax returns say. The system literally just looks at the vendor expenses in your accounting software, then it looks at the TDS you filed in your returns. If they don't line up, bam, a notice is practically guaranteed.
Okay, enough with the problems, right? We've seen where things go wrong. Now for the part that really matters. How do we prevent this from happening in the first place? It's time to stop reacting and start being proactive. It's time to build a defense system.
And here it is, your toolkit, a solid 6-point control system. First, you need a matrix that maps every single type of expense to the right TDS section. No more guessing. Second, a super strict checklist for bringing on new vendors to get their data right from day one. Then, you need to do monthly reconciliations to catch issues early and match your challenge before you file. And this is so important, a maker-checker process where one person prepares and a second person reviews. This is about building discipline into your daily operations.
So, let's talk about the real stakes here. Why does mastering this process truly matter? Because, trust me, the cost of getting this wrong goes way beyond a small penalty or some interest. It can hit your company's bottom line, and hit it hard. 30%.
Just let that number sink in for a second. If you fail to deduct TDS correctly, the tax law allows the department to disallow 30% of that entire business expense. I'm not talking 30% of the tax, I'm talking 30% of the whole expense.
So here's how the damage happens. When that legitimate expense gets disallowed for tax purposes, it's like it never happened. It gets added right back into your profit. All of a sudden, your taxable profit on paper looks way bigger than it actually was.
And a higher taxable profit inevitably leads to one thing, a much, much higher income tax bill. See the chain reaction? A simple TDS compliance error just snowballed into a major financial problem for the business. This isn't just about paperwork, it's a serious financial risk.
So what's the big takeaway from all of this? It's this thought right here. We have got to stop looking at TDS as just a chore, some filing ritual we have to do every few months. Real effective compliance is about building a smart internal control system, one that protects your business from financial risk day in and day out. And that is how you move from mismatch to mastery. Thanks for joining me.